Hey, Rebel Bankers, this is your host, Chris Naugle, and welcome to the show. So today we're going to take you on a journey to talk to you a little bit about some key strategies, some trends, and some patterns that we're seeing in the markets and ways to utilize that and use it to your best advantage. Because one of the things I see a lot with real estate investors is fear. A lot of real estate investors use money as that crutch, as that big mountain in front of them that stops them from actually getting started. And the one thing that I want as many people as I can to know is that money is all around you. And money is really one of the easiest parts about real estate. But the thing you have to understand is you have to understand how money really works in real estate. So that's what we're going to do. And I want to help you get started on your journey to becoming a Rebel Banker. And that's what we're going to do today. We're going to get that started. But a couple other things you can do to help yourself along the way is grab a copy of my book, The Private Money Guide, and check out all the events that we're doing at chrisnaugle.com. And we've got an awesome event coming up here April 13th. It's Money School's Inner Circle Masterclass. It's a full day of training. But let's jump right into this. So I want to get into a little bit about where we're at right now in the market cycle. This is something that's so vitally important to understand that if you can master this one technique, this will put you that much further ahead of all the other people out there that you're fighting against and competing against in this real estate space. Because real estate, just like the stock market, work in very unique patterns. And just like the weather outside, we're in Buffalo, New York. I don't know where you're from, but in Buffalo, we get some nasty weather in the winter. I mean, we get some terrible snowstorms, ice storms, just about everything. Heck, we even get almost all 4 seasons in a matter of the same week here. And one of the things that happens when we're going to get a big storm is the newsman comes on and warns everybody there's a giant storm coming, stay inside, get prepared, go grab whatever, fuel your car up. And we get these warnings, which creates fear, and it creates people to take action. And that's because of a storm. But what if you knew that the stock market, the overall markets all work in very similar patterns, just like weather? They do. The stock market certainly works in very rhythmic, predictable patterns. And one of those patterns is easy to understand. If we just take a look back in time and we go back to 2008, in 2008, we all remember that time. The market plummeted. And by 2009, we were right in the midst of the Great Recession. It was an awful time for so many Americans, and so many people around the country and the world faced a lot of problems. Real estate values plummeted. Jobs were lost. People were losing their houses, their cars, their jobs, everything you can think of. It was a terrible time. But during that period of time, there was a lot of people that understood some things. And some of those people understood how money worked. And those people were able to take advantage of that terrible time and see it as an opportunity. See, those people were prepared because they saw this storm coming. And what they did is they prepared for the storm, which is what I want you to do right now. I want you to start preparing. Because that was 2008. That was over 10 years ago that storm hit the United States. And one thing I can tell you based on the things I know from being a financial advisor for 16 years is that another storm is coming. And it might be right around the corner. I can't sit here and I can't tell you what that storm is going to look like. I can't tell you what that storm is going to mean. I can't tell you what's going to start the storm, and I can't tell you what it's going to do to real estate values. But I can certainly tell you, you need to get prepared. And one of the things we need to make sure that we prepare for is we need to make sure that we have money available to us. It might not have to be our money, because I always say this, it's never about your actual resources. It's about how resourceful you can actually be that matters. My whole life has been a story of being resourceful. Let me tell you a really quick story, and then I'm going to get right into this. In 2008, when the whole market was plummeting, I almost went bankrupt. I was stuck in a development deal of a strip mall, and I was literally 2 payments away from being 100% bankrupt. I couldn't afford anything. I couldn't even think of how I was going to get through this time. And I'll never forget, I had to come home one night when we were almost completely broke. I came home to my beautiful girlfriend, who's now my wife, Larissa, and I had to look her in the eye and I had to say, "Sweetie, I need your help. I need you to help me pay the mortgage on the house." And I also need you to help me pay the utilities because I'm really close to going bankrupt. I don't know how I'm going to get through this mess. Oh, and one other thing, sweetie. We have to rent that bedroom over there to somebody because without that, we're not going to have enough money to keep this house. That was a difficult thing. And we made it through that period of time by a lot of luck and just sheer consistency and persistency. We kept working at it, just like you have to do. When you're in hard times, you got to just keep going at it. Never, ever quit, because you can't fail unless you quit. And that's what we did. We just kept working at it. We got through it. That strip mall got refinanced, and we made it through that period of time. Excuse me. But then the next thing that happened is things didn't just all of a sudden get better right after that. I'll never forget, I'm sitting in my office. The bills are piling up. The phone's ringing off the hook. And I sat there and I'm just thinking, oh my God, this can't be the life that I signed up for. This can't be what my life is going to look like. And I said, I need a breakthrough moment. I need an opportunity that's going to get me out of this funk, an opportunity that's going to set me straight and get me on the right path. And that opportunity came in the form of a phone call. And I want you to all think about this and relate to this. The phone call came like this. I answered it, and I said, hello. And he says, hey, Chris, how are you? I said, well, I'm doing all right. And I said, how are you doing? He said, I'm doing fantastic. And I remember putting the phone down and thinking, what a bunch of bullshit. Who's happy and energized in this time? Everything's falling apart, and this guy's acting like he's happy. And I'm just thinking, this guy's trying to sell me something. And he was. He brought me an opportunity, and that opportunity was a 3-unit apartment building in downtown Buffalo. And I remember looking at this. It was cash flow positive. It was in a great area. It was everything about this place spelled the opportunity that I was looking for. And I got excited. I got energized again. But then the one thing happened, and I'm sure you guys have had this happen. You start asking yourself questions. You start asking those questions like, well, how am I going to afford this house? How am I going to afford to buy this apartment building? Where's the money going to come from? What if one of the tenants leaves and I don't have rent roll? What if this area doesn't boom? What if, and I what-ifed myself right out of that deal. And I stopped taking that broker's calls and I just let that opportunity pass. And years later, I remember driving down where that building was and I saw it. But when I saw it, it looked completely different. It wasn't even the same building. It had been completely transformed into an unbelievable apartment building. And I remember going home and sitting down and running the numbers on this thing to see what kind of an opportunity did I miss out on here. And what I found about knocked me out of my chair. You see, I could have bought that 3-unit apartment building for $180,000, but I didn't because of fear. That $180,000 apartment building just a few years after that point was worth over $400,000. Today, that apartment building would be worth well over $1 million. So I literally allowed fear to talk myself out of over $1 million. How many times have you allowed fear to stop you from doing something that you knew you should have done? How many times have you looked at something and said, you know what, if I only had the money to do that? Or you look at a deal and you say, I need to find the money, but I don't know where it's going to come from. That's what this podcast is all about. It's to teach you those things. It's to teach you how to overcome fear, but not just overcome fear because that's a mindset problem, but it's going to teach you where that money really exists, where all the money exists, where trillions of dollars exist to fund your deals. But first, we got to go back to that market pattern that I was talking about, the storm that's coming. So right now, and for the last 10 years since 2009, the stock market has been returning solid returns. All the way up until just last year, the end of 2018, the stock market started showing some weakness. It started showing some negative returns. And for the year in 2018, and this depends on what you were invested in, the markets returned a negative return. And now we're into 2019 and the signs are everywhere. The bells are going off. The sirens are blaring. Everybody knows that we're at the top of the market and there's something coming, but nobody's doing anything about it because nobody knows exactly when that's going to happen and exactly what that's going to look like. So I want to ask you, are you preparing? Well, let's talk about how to prepare because there is a storm coming. And the best thing I can tell you is you need to understand 3 basic rules, 3 fundamental rules that were set forth by a guy named Warren Buffett. You may have heard of him. Warren Buffett's somewhat of a genius when it comes to investing. And Warren Buffett says these three things. Number one, to make money in the markets, Warren Buffett says you have to buy low. Well, isn't that the case with real estate too? You have to buy low. And you can always create an opportunity in real estate because it's all marketing. And if you know how to find deals, well, you're going to know how to buy low. So we got that one covered. We know how to buy low. Pretty simple. Number two, Warren Buffett says, he says you have to sell high. So we just talked about the market cycle, right? 2008, we bottomed out. 2019, we're at a pretty high point, maybe the highest point we've ever been at in the markets, but also in real estate. See, I want you to get this, in your mind. I want you to think of the markets and real estate are tied, but the markets go down first and real estate follows later. They call that a lagging indicator. So if the markets are going to go down, and you believe me in telling you that the markets are going to go down, we know that real estate's going to go down. So that's going to create opportunities to buy low, but we have to understand that we have to sell high as well. So we have to buy low, number one. Number two, we have to sell high. And number three is the most important thing. And Warren Buffett says rule number three is don't lose money. Now, that just sounds kind of cliche, right? Don't lose money. That's like Bed Bath & Beyond. We understand the bed and the bath, but what is this beyond thing? If you remember that from Family Guy, that was pretty funny. But the beyond is the don't lose money. And how do you not lose money in the stock market? Well, it's quite simple. Follow rules number one and number two. Buy low and sell high. Know when to hold them and know when to fold them. So let's transition over to you need money for your deals. Right? You've got a deal and you need to find money for your deal. So you have lots of options as to where money is, but we're going to focus in on one option. We're going to focus in on one place where tens of trillions of dollars exist. You probably have money in this. I can tell you your family has money in this. Your neighbors, your coworkers, and all the people you surround yourself with have money sitting in this one source. And that one source is employer-sponsored retirement plans. 401ks, 403bs, 457s, you name it, they're employer-sponsored retirement plans. And from a young age, we're all taught to save for retirement, right? We hear this from our grandparents. We hear this from our parents. You got to save. You got to start putting money away at an early age to save for your retirement because you want to make sure that there's someday in the future. 65 is that magic number. I hope your number's a little sooner. 65, that magic retirement date that you're going to be able to have enough money saved so that you can live the life that you want. Boy, that sounds great, doesn't it? For some of you, you're young and you're thinking, wow, 65, I don't even comprehend that. That doesn't sound so sexy to me. That doesn't sound so good to me. But we have to understand that employer-sponsored retirement plans are one of those vehicles that almost everybody has, everybody that's working has, and they hold tens of trillions of dollars. So wouldn't that be a great place to start to find some money for your deals? Well, that is a great place. But a lot of people would say, well, you can't use your 401k. You can't just take money from your 401k. You're taxed on that. And if I'm not 59 and a half, sorry. If I'm not 59 and a half and I take money from my 401k, I'm going to pay the IRS a 10% IRS penalty. Plus they're going to ding me for taxes. Chris, I'm going to lose 40% of my money if I take money from my 401k. Precisely. That's why you're not going to take money out of your 401k that way. What we're going to talk about is something that's available to almost every single employer-sponsored plan. But I'm going to start calling them 401ks. That's what most people know them as. So most people have a 401k. And they know that if they take money out of their 401k, they pay taxes and penalty on it. So that's not an option. We're not going to talk about that. But does everybody know that almost all 401k plans have the ability to take loans from them? You can take a loan, and your plan might be different than other people's, but you can almost always take a loan from your 401k. Usually, you can take up to 50% of the value from your 401k as a loan. Now, if you take money as a loan from your 401k, what can you do with that money? The answer is anything you want. That money is not taxed because it's simply a loan from your 401k. But there's some rules of engagement we need to understand. And then we're going to get back to why the market cycle in this storm is so important for right now. But let's understand what taking a loan from your 401k actually means. So if you call your 401k company or you go online and you log in and you take a loan from your 401k, they will gladly give you the money. They'll actually wire it right into your account or mail you a check, whichever you prefer. But when you do this, you have to understand that you have to pay that money back. This is a loan. This is not just a good gift. This isn't money that you can just take and not pay back, because if you don't pay this money back, you will pay taxes on it, and you will pay penalties, and you will lose roughly 30 to 40% of whatever the value of that money is that you took out. So when you take money out as a loan, that money has to be paid back just like any other loan. Makes sense? And that money that you pay back is paid back with an interest rate, because you take money from a bank, you have to pay them back with interest. Well, if you take money from your 401k as a loan, you have to pay it back with interest. But the one thing that a lot of people don't quite understand, they understand that or they find out when they call, that if they take money, they have to pay it back. They have up to 5 years usually to pay it back. Some are longer, some are less. You have up to 5 years to pay that back. And how it's paid back is from a deduction from your paycheck. Now that really sucks, right? I just took a loan from my 401k. I have to pay that money back to my 401k. I have to pay interest on that money that I borrow, and I have to pay back out of my paycheck every single pay period. So now I'm making less money every single pay period. Well, that really sucks. It does. And if that's all you did is just took a loan and you went out and you bought something frivolous, like a TV, a flat screen TV, maybe you bought a new iPhone, maybe you buy a car. Those are terrible uses of this money. You should never do that. But what I'm going to talk to you about is I'm going to talk to you about taking a loan from your 401k and using that in one of two different ways. Either number one, you buy a cash producing piece of real estate, or you loan that money from your 401k to somebody else at a higher interest rate than what you are paying. But now let's talk about the 800-pound gorilla in the room, and that is this interest rate. So you took a loan from your 401k, and you're going to pay interest on that loan when you pay it back. But my question would be, who gets that interest? Does the 401k plan get it? Does your employer get to keep that interest? The answer is no and no. You get that interest. So if you take a loan from your 401k and you pay that money back, and let's just assume that that interest rate is 5% for today, you are paying yourself back. Your 401k is getting paid back by you at an interest rate of 5%, and you are getting 100% of that interest. So what did you just do? You took a loan, okay? The first thing you did is you followed Warren Buffett's rule number 2. You sold high. Because right now the market is at a really high point. So wouldn't it make sense, if the market's at this high point, wouldn't it make sense to get your money out of the market, to get your money out of all these stocks and bonds and get that money in a safe place? Well, it would make sense because you're selling high. You're folding at the highest point, which means you take all your profits off the table. So that's pretty smart. Getting out of the stock market right now is very smart, because you definitely will eliminate any chance of you losing money, which is Warren Buffett's rule number 3, don't lose money. So if you don't want to lose money in the stock market, all you need to do is get your money out of the stock market and get it to cash. So now that it's in cash and you took it as a loan, what do we have to do? Well, now we have to use that money we took out as a loan. We have to make some money on that, okay? Because we got to pay ourselves back at 5%. So we're making 5% on that money guaranteed, because I know you're a smart investor and you're going to pay yourself back with interest. But now what are we going to do with this pile of money? You can do what I did. In 2006, I bought a flip. And that flip needed money. So I went to the bank, I borrowed 80% of purchase price, and I needed the rest of it. I needed the closing cost, and I also needed the rehab. So my 401k loan paid for most of that rehab and that closing cost. So then I renovated that house. I got it all done. I sold it for a profit. That profit was my return. I used money from my 401k loan that I was paying 5% on. I used that money to flip a house, so that you could do that. But right now, maybe flips aren't your thing you want to do. Maybe you don't want to flip houses. The second thing you could do is, why don't you go out and buy a rental? How about a BRRRR? BRRRR. Buy, rehab, rent, refinance, and repeat. So if you don't know a lot about what the BRRRR strategy is in real estate, you really need to Google it and check it out, because it is one of the best strategies for today's market conditions. So we use that 401k loan to go out and buy a property at the right values. Because remember, it's all about the buy in real estate. The buy and the purchase price is the most important thing. So you have to buy right. So you buy this property, you renovate it, you turn around and you rent it. Then you take that property to the bank, you refinance it at the bank. The bank gives you 80% of appraised value, not purchase price. Because on a refinance, the bank will typically give you 80%, 70 to 80% of the appraised value. So Is the appraised value the same as what you bought it for? No. You just renovated the house. You just spent all this time and energy making this house beautiful, building equity into your property. Then you put a tenant in it, or a resident, as we like to call them, that's paying you rent. That is a very attractive piece of property for a bank. That is an unbelievable asset. So the bank is going to give you 80% or 70 or 80% of the appraised value, which then should pay you all the money back that you used for your loan. So you have a choice. You now can pay all that money back to your 401k. So you already made 5% on that. You pay all the money back, and now you've got this awesome rental property, the BRRRR, that is now paying you X amount of money per month for the rest of the time you own that property. And you keep the property. You own that property. You didn't have to flip it and give up the asset. You maintained control of the most important thing, which is the asset. So that is how I would have used the money from the loan. And that's how I used it in 2006 when I did my first flip. However, now we want to talk a little bit deeper about the second way you could use this money. Let's just say you're one of them people that doesn't want to invest in real estate because you don't want to swing hammers. You don't want to get calls on Sunday. You just want to make money while you sleep. You want your money to work harder than you ever could, because I always talk about that, don't I? I always talk about how to get your money to work harder than you ever can. Because right now, my guess is you're like most people. You're out there going to work every single day, working overtime, putting in a hard day. Sometimes you work weekends. You work really hard to get ahead. You work extremely hard to make the life that you want. But so many of us allow our money to be lazy and sit on our couch watching our TV while eating our Lay's potato chips. That's what we do. We let our money be lazy while we go off and slave and work really hard. Why don't we switch that around? Okay? Why don't we teach our money how to go to work and work really hard while we actually spend time working on our business, not so much in our business, or spend time enjoying our life and making money while we sleep while our money works harder. Well, using your 401k properly is a really good way to do that. And right now is the best way to do that, because right now you don't really want your money in the stock market, because we know it's at a high point, and we know we need to follow Warren Buffett's 1, 2, 3, buy low, sell high, don't lose money. So get out of the market. But once you get out of the market, keeping your money in cash isn't so much a great strategy. It's not. Keeping money in cash means that you're losing money every day, every week, and every month, because inflation is going to be more than what you're making on your cash. So what we need to do is we need to take that cash and redeploy that money. So I just told you a couple ways to do that. You can flip a house. You could even do a wholesale and use your loan from your 401k to seed the transitional funding for a wholesale deal. You can use that money to flip the house. You can use that money to purchase a BRRRR before you refinance it. So those are some great strategies. But what if you don't want to do real estate? Well, how about finding some really good real estate investors in your neighborhood or in your market? Go out there and find out who are the ones that are really knocking it out of the park. Then go to them and ask them if they ever work with private investors, because this is you. You are now the private investor. You hold the key, which is the cash from the loan from your 401k. You hold that cash and you need them to borrow that money. So what you're going to do is you're going to become the bank. You're going to basically find an investor that needs money to purchase a property or rehab a property. You're going to loan that money to them just like a bank would. And you're going to underwrite them and the deal, mostly the deal. You're going to look at the deal and make sure they bought the deal for the right price. You're going to make sure that there's adequate equity in the deal and you're not loaning too much money on that property. You also want to make sure that you control the flow of that money to that investor. And what you're going to do, the most important thing is, because remember, you took this money from your 401k. And it's costing you 5%. You're paying 5% back to yourself. Even though you're keeping that money, it's still costing you money every single pay period. Every month, every bi-weekly paycheck, whatever it is, it's costing you money. So what we need to do, if you're paying 5%, we need to loan this money to somebody at 10% or greater. Because if you just did it at 10% and you had $100,000, what you just did is you just netted $5,000 extra per year. Because 5% of 100,000 is about $416.66 per month. And if you loan that money out at 10%, that's a little over $800 per month. You literally doubled your money and made a net of $5,000 for doing nothing. But you made more than $5,000 because remember, you're paying yourself back and you're keeping the interest there. So that's an extra 5% on top. So you see how this all makes sense? We really just accomplished a whole lot of things right here. First thing we did is we identified that the market cycle right now puts us at the top. And at the top, there's only one way to go, and that's back down or sideways, but we're not going to go sideways for long. We could go sideways for a little bit, but then we're going to go back down. And we don't want to ride that roller coaster down. We want to literally step back and watch that roller coaster go down, but we want to plan it out. So we want to prepare for the storm. So how do we prepare? Well, if you've got money in your 401k and it's invested in mutual fund stocks, bonds, or ETFs, we want to sell those assets. We want to sell those investments and get into cash. Then what we can do is we can then take a loan from our 401k and find one of the proper strategies that suits your needs. And then we apply that money to that strategy and we start making money on top of making money. So that strategy right there is so unbelievably powerful. And if you're one of them out there that is looking for money, all you need to do is find somebody that has a 401k, explain to them how to become the bank, or introduce them to me in this podcast and have them watch this episode so that they can see exactly how this works. Because the more people you explain this to, the more sense it's going to make to them that they really should get out of the market. And if they're going to get out of the market, they need to make money, because when the markets go down, money has to find somewhere to go. We call it the flight to safety. Money is going to always flow to the safest investment to give them a return. They don't want risk. And right now, one of the safest places that you can invest money, or that somebody else can invest in, is real estate. It is a tangible asset. It is something that will never go to zero, because real estate cannot go to zero. Real estate is a tangible piece of property that no matter what happens, it can't go to zero. You might say, well, if there's an earthquake or a hurricane or something happens, sure, it could go to zero. Well, no, it can't, because if you're smart, you insured it. And if you're going to loan money from your 401k to another investor, you better make sure that they have proper insurance on that policy. And you also better make sure that that insurance they have names you additionally insured. Because if that property does wash away in a flood, or does get struck by lightning, or something happens and it burns down, you want to make sure that that insurance pays you, the lender, first. So that's assuming you're a lender. But what if you're somebody that just needs the money? You're someone like I was in 2008 and 2006, where I needed money. Well, if you need money, well, go find somebody that has a 401k. Teach them how to use that 401k the way that we just talked about, and then have them loan you money just like a bank would, and then give them the security of the first position, okay, the deed and trust or the mortgage. Give them that first position lien, so that they're in a nice, comfy place. If you don't pay them, they can foreclose and take that property. And always, always, always make sure that if you loan money to somebody, or if someone loans money to you, it's all done in a capacity of a company, in a corporate setting, like an LLC, an S Corp, a C Corp. Never, ever loan to somebody individually. Always loan to somebody's company, because that makes it commercial. And just trust me, that's what you need to do. So follow the market trends. Start getting prepared for the storm that's coming, and start teaching people all about how money really works, because there is tens of trillions of dollars right now sitting in these employer-sponsored retirement plans, waiting for you to teach them how to use this money. That is exactly what you need to do. You need to become a rebel banker. You need to become a rebel banker that has the knowledge of how money works, just like we're talking. And then you need to go out there and you need to talk to people about this. Ask people about this. Ask them if they're comfortable with their current investments, if they're comfortable with where the market is. And if they're not, talk to them about your opportunity. Your opportunity is your real estate deal. Start telling people about what the opportunity is that you have for them, and start showing people how you can help them. Never talk to somebody and ask them for money, because that's all about what's in it for you. Talk to people about what's in it for them. What's in it for them is an extra $416.66 per month. What's in it for them is the security of having a tangible asset back their loan. What's in it for them is the money that they're going to get like clockwork every single month. Every month they're going to get a paycheck from you, and that paycheck is going to be money that they don't currently have coming into their household. Maybe that money can be used so that they can go out and they can take their family to dinner one extra time per month, or maybe take an awesome vacation once a year. These are life-changing things. These are things that literally change people's lives and make families stronger. And you hold the key to that. And that key is just financial education, teaching people how money really works, like I'm teaching you right now and like I'm trying to explain to you. So if you can learn how to do this and you can just start talking about the market cycle, the storm that's coming, how to better use your 401k in terms of loans, and how to actually put those loans to work so that that money actually is working harder, and that will be what does it for you. That is what has done it for me. My knowledge of money and how it's worked is really, it has catapulted my business. And all I had to do is understand where all the money was, tens of trillions of dollars sitting in employer-sponsored plans. Then I needed to understand the opportunity that I had, my real estate deal, the flip, the burr, whatever it might be. Then I needed to find a way to explain it to them in a very simplified way and be able to draw that on paper in a very simplified way so that they can understand how this is kind of a no-brainer for them to loan me the money so that I can then pay them an interest rate far greater than what they're getting right now on a secured basis. It sounds like a win-win to me, and I don't know how that sounds to you. But that's about all the time we have today. We're going to be doing more of these solo sessions where I'm going to just teach you about specific strategies and how to actually apply some of this knowledge, because knowledge is great, but knowledge is everywhere. I want you to learn how to become a rebel banker, and I want you to learn how to apply this knowledge to get results for yourself so that you can start to change your life, so that you can start doing more deals, scaling your business faster, and getting the life and the business that you really want. And it all starts with money. It always does. It starts and ends with money. So thank you all for joining me today for another edition of the Real Estate Podcast, the Real Estate Money School podcast. And I want you guys to get started on your journey to becoming rebel bankers. It is such a powerful thing for you to understand how money works and the education that surrounds that. And I want to teach that to you. So do this. Grab a copy of the book, The Private Money Guide. That would be a great start. And also join us for our events, and you can learn about all of them at chrisnaugle.com. And the other big thing, and I want all of my audience to understand this and know this, we have a very amazing event coming up. April 13th. We have an all-day event called the Inner Circle Masterclass. This event is all day. It's going to teach you all about these strategies, but not just teach you about them. It's going to dive deep into the application of how to use these strategies, and it's going to teach you how to use them in your marketplace. And it's going to dive deep into your needs and your goals. It is an entire day where you and 9 others, that's all it is. It's 10 people only. You and 9 other people will be with me learning how this works. And then after that, we're going to go out. We're going to have a beautiful dinner, some drinks, and we're going to mastermind. And hopefully some of the people in the room are lenders. Some of the people are in the room are people that need money, and everybody's going to come together at the edge of the coin. So that's what I've got to offer. It's April 13th. If you want to learn more about that, check it out at moneyschoolrei.com/inner circle. We only have, I think, 5 seats left as of today. So thank you all for joining me for another edition of the Real Estate Money School. And I will see you all next time for our next guest, which I got a big surprise for the next one. Thank you, folks.